All right, good morning, everyone. Today is May 18th, 2022, and I am back with another edition of the Wednesday live show, which I know most of you guys are watching it on replay, so that's fine too. Well, here we are. The market has been attempting to put in a little rally, and all of a sudden this morning, some a couple things have happened recently, and so much has happened since the last time I was here last Wednesday. I can't even remember it all. But as I recall, um, this most recent sell-off. Let me go to the S&P chart here. This most recent sell-off started right here. It started right here on 421 at S&P 4500, and this is when Powell was a few Thursdays back when Powell was speaking to, I believe it was like the Economics Club in New York or something like that. But anyway, so he was speaking, and it was the middle of the early in the day, I think it was. It was during the trading day, and then S&P was right about 4,500, and he started speaking hawkish, very hawkishly, and talking about inflation and what the Fed's got to do and this and that. But regardless, the market just prior to that, it had a little bit of it had a pretty big rally, a little bit of a sell down, and it looked like it was starting to recover. And then of course Powell came out, started speaking about, how aggressive the Fed was going to be in fighting inflation, and the next 2 days, as you can see, the market took a winger the next couple of days, and that basically started this latest leg down. Interestingly enough, these three sort of big green bars up here were kind of a little bit unusual. And when you get these 1 day rallies, I recall these rallies were extremely significant. I mean, the volatility and the ranges have been fairly extreme recently, but anyhow, just recently going into this week, let me change this to a weekly chart. So basically, starting here at the beginning of April, we've had 6 weeks in a row down, right? Like 6 weeks in a row, the S&P has closed lower than the previous week's close. So 6 weeks in a row, and if you go back about yeah, at least 3 or 4 weeks, I think the consensus was basically calling for an oversold rally, right? And going into each week, everyone's thinking, okay, this is the week it bounces, and so that's been happening for several weeks. And so same thing this week, right? Especially with last week, and this is a weekly chart, by the way, but last week, the market sold down significantly and then managed to kind of rally back. And so on the daily chart, basically, that created a nice textbook pivot low. And that pivot low is still holding, but the funny thing is we come in this morning, and the big news today is that Target came out with earnings, and look at that, down 25% overnight, right? And I think I saw a couple places where, and obviously, let's look at the weekly chart just to see, put that in perspective. Yeah, that's pretty nasty. I mean, especially for Target. And of course, earlier in the week, Walmart, same thing. Walmart basically erased, what, almost a year's worth of, well, a year's worth of gains. If you go from May to May, I guess. Look at the follow through down move in Walmart today. So something ain't right, right? So let's see if I just go 1 year. Yeah. So there's 1 year on Walmart. So you can see basically, the type of environment that we're in is extremely dangerous when, Walmart can wipe out a year's worth of gains in a relatively short amount of time. And basically that means that anybody that bought this stock in the past year is underwater. right? And so, same with Target. Target is that's just an epic disaster. And so, what is that telling us? I'm not sure. I'm sure, all day long on CNBC, we'll have a lot of experts come on and explain what it's telling us, but it can't be good, right? I mean, prior to now, most of the real damage in the markets has been in the momentum type stocks and the tech stocks and that, and and we're starting to see cracks in other places of the market. And quite frankly, energy and materials have been the bright spot, and some of the airlines have done okay, but a lot of sectors of the market, biotech for one, has just been epic disaster. I see. Look at biotech. I mean, yeah. The funny thing is that a lot of tech stocks and a lot of, go back a couple years on the charts, you'll see that a lot of stuff peaked back in 2021. Now the markets, excuse me, the markets themselves, the indexes peaked out at the beginning of 2022, but there was some warning signs. IPOs, talked about these last week. IPOs peaked towards the beginning of 2021, and you can see at the beginning of this year they were significantly down, but IPOs are just absolute disaster. You go and look at some of the individual names. I have a screen over at Finviz that basically shows all the companies that have IPO'd in the last year, and if you look at the charts through the charts of those, most of them are just a disaster. I'd say 8 out of 10 are a disaster. Anyway, interestingly enough, this IPO ETF is below, it's below when the pandemic sell-off high. And so that's kind of, this high right here in, I guess it was February, March of 2020. That's kind of my benchmark for looking to see how something has performed. So let's look at Target real quick, just for the fun of it. See what it looks like compared to the pandemic sell-off. So yeah, I mean it's still quite a bit above it, but yeah, the highs right here. So you look at ARK. Yeah, so ARK is like testing the pandemic lows. So as you recall, back here the S&P 500 fell. Let's just go back and review this real quick. So there's your S&P 500. It was the S&P 500 was on a tear, like just a straight up tear right here. Doesn't look as dramatic obviously now because of the scale of the chart, but that was a dramatic run up into the beginning of the pandemic, right? And then from intraday high to intraday low in just a matter of, I think it was like 6 weeks or something. It was a very short amount of time. Might have been less than that. Very short amount of time. Go back and sometimes it's fun to scale these charts. S&P 500, this is the pandemic sell-off. From intraday high to low, and most, line charts are not going to include this day right here, but 35% sell-off in a very, very short amount of time. Like I said, about 6 weeks. And I think it caught everybody off guard because you had that gap down and then several days just straight down. And so a lot of times when that happens, it sort of catches everybody off guard. I mean, you don't get like a 3 or 4 day sell off and then everybody sells their stocks, right? And so what happens is you get that sharp sell off, and then by the time people realize what's happening, you're already down significantly, caught a little bit of a bounce, and then of course then this is where the Fed stepped in, right over here. And so the rest is history, as they say. The Fed just drove this thing up and drove it up, and then my chart's all screwy now because of going back. But anyway, let's see, I'll have to pull something else up here. Whoops. Pull something else up here, and then maybe that'll fix my chart. As you can see, oh, so here we go. This is actually, I got a bunch of saved charts. This is one of my favorite ones to sort of look at for context. All right, so here we go. 2, 4. It was literally like 4 weeks, right? The pandemic sell-off. See it over here on the left. 1, 2, 3, 4 weeks, and then the Fed went in with both barrels. You know, the what's the old saying? Anyway, so created trillions of dollars to rescue the economy from the pandemic, and then there was a lot of money sloshing around the system. They claimed, back here they claimed that their extreme measures were not going to create inflation, and so all this time later, inflation started picking up way before the pandemic, which most people don't realize. Obviously, like now everyone's talking about inflation. It's the hot button topic and the number one thing that everyone's talking about. But if you recall, if you go back in the news, you would realize that back in 2018, inflation was starting to heat up, and they pretended there was no inflation for a long time, and then they said that their pandemic policies wouldn't create inflation. But anyway, here we are. Inflation's running, 8 per. If you believe the CPI, it was 8.5, 8.3 the last print. But so, at this point, and I think Powell's speaking, right now or as we speak, and all these Fed speakers, like almost every day now, they're coming out and speaking, and a lot of times they say stuff, when they're hawkish, the market doesn't like that. So anyway, it's going to be interesting to see what happens here. 6 weeks in a row down, and it's going to be interesting. So on the week right now, we're down again, which is pretty amazing. So at some point, you do kind of expect a rally, a bounce. You can't, well, here, let me pull the chart up here so you can see it. Whoops. These charts, they drive me crazy. Let's see if I can fix that. Here we go. This is what I was looking for, is the weekly RSI. Weekly RSI is at 33, so it's getting close to oversold. Let's switch over to the daily here and see what that looks like. Daily RSI got down to basically 30 here, I guess, at some point. It's at 40 now, but it got down pretty low to the oversold level. And typically that's where it bounces unless you've got some sort of a crisis. You can see back here in late April, or I'm sorry, February. Late February, RSI got down, practically touched that line at at 30, and bounced a little bit here, but but anyway, yeah, today this is actually starting to shape up like sort of a V type bottom. Let's see if I can fix this chart now. Yeah, I gotta tell you, these stock charts drive me crazy. Let's see what happens if I do that. Oh, there we go. Yeah, I really miss my old charting platform, but it is what it is. At least these are real time, Years ago, years and years and years ago, when I used the free stock charts, those were basically real time as well. So, but they built those in Microsoft Silverlight, which no longer exists or works in a browser, and so I had to find an alternate solution. Anyway, we got a pretty nice pivot low here. Pretty nice pivot low, and it's still pretty much valid, right? Typically you see like these spike lows and you get a little rally out of them. There's one. This one doesn't stand out as much as a couple of these other ones, but if I didn't know what this was, if there was no scale on here, if this was just a stock chart, I'd say that pivot low right there is pretty textbook. And so you would expect a rally, I'd say halfway to 3/4 of the way. I'm not going to try and draw a fib on here, but in the old days, I'd just, I'd draw all kinds of stuff on the charts and that, but it's so clunky to try and do it live here on the show. But you can do it on your own chart, and you could draw, whoop, there it goes again. Jeez, such a disaster. All right, so what I was about to say is you could draw some fibs on here. Typically, you get a pivot low like that, and maybe I would start from just right here and see what about halfway to 3/4 of the way. Um, I mean, I have to do this just because. Well, there we go. Jeez, what a mess. These charts. So all I wanted to do is draw a simple trend line on here. Just basically sort of down across these highs. So that's this market's sort of in I believe it's in trouble, but that doesn't mean that we can't see some rallies here and there, and bear market rallies, I guess people are calling this a bear market, but bear market rallies can be pretty significant. Anyway, that's a good spot right there. At least did you see that? I'm not sure why every time that I try and adjust my chart that it jumps around like that. There we go. That's close enough. Close enough. So if the market just trades sideways, it's going to break that trend line. Now the real trend line goes like this, right? I mean that's the major overhead resistance, and I've got that on a couple of charts, and kind of we might run into some resistance here. These steep trend lines typically don't mean a whole lot, so I probably just remove that. But I've been saying for ever since up here that this particular trend line that's the that's the one that, and obviously we're extremely extended from it now, but if the market were to somehow or for some reason stage a significant rally, that would be the trend line to beat, obviously. Um, but so, the Fed is hawkish. They have embarked on a rate hike cycle. You know what? Whoops. Let me just see if I can fix this chart and dispense with all this nonsense of that. There we go. I should have just pulled up the chart where I already had the trend line drawn on it, but anyway, so there we are. If you go all the way back to, there we go, the pandemic sell-off, I'm going to say that, well, there's a ton of support. I'm about to give up drawing on this chart live, but 4,000 right here is kind of is a pretty big level. Those big round numbers, something like 4,000, is always something everybody watches. So right now, S&P 4,000 is the over/under. Right now, it's at 40.20, and we've taken a couple of forays below 4,000. We've popped back above it. Market just rallied up to 4,100, and that's where ran into resistance right about the vicinity of 4,100. So there's a few things you could draw some fibs on here and look for about a 50% retracement. If you're looking for support levels anyway, 50% retracement, 61.8. It's hard to really know how this thing's going to shake out. And there's a lot of people out there guys on CNBC, this and that, that will tell you that this is a normal run-of-the-mill market correction. That the S&P, typically has a 14% drawdown, which is about where we closed last week, I believe, like somewhere right around 14%. But yeah, and it is. That's typical average since way back in the day. The average year has that sort of a sell-off. But what's different now is there's a few things that are different now. One is that inflation is the highest it's been in 30, 40 years or whatever, right? Since the 70s or 80s. I lose track. And the other thing that's different is that the Fed is, and I believe the other day, Powell actually admitted that they were that in hindsight, I think his words were in hindsight, that they were too slow to begin raising interest rates. And so here's what's different is they're just now. I mean, there's been interest rates were zero, and they had a 25 basis point and then a 50 basis point. And so we're looking at another 50 basis point, but they're embarking on a rate hiking cycle now into a slowing economy, right? But inflation, I mean, is out of control, and everybody knows that. And so, I mean, there's a lot of dislocations being caused by all that sort of, all that macro stuff happening at the same time. And then, of course, you got a little bit of a sell-off in the S&P here. And meanwhile, this is this is what, most stocks look like, right? Or I wouldn't say most, but I would say a lot of stocks, tech stocks, momentum stocks. This is what they look like. They look like ARK. I mean, they've just been destroyed, and tons of damage everywhere. The sectors, let's just take the financials, right? I mean, look at the financials. Nasty, nasty price action. I can't believe this chart keeps jumping around like this. Really annoying. I'm gonna have to work on my skills here with these silly charts, because there we go. Anyway, looking pretty rough there. Obviously, if you look at the pandemic high on the financials, XLF, you can see it was right around 30 bucks, and look at where we touched just the other day or last week on that pivot low there. So this is pretty nasty. Let's take a look at the industrials. Same sort of thing here, right? The chart, I guess I could put it on log chart. I don't dare put it on log chart. Yeah, but yeah, same sort of thing here. The industrials were, right around a little over 80 for the ahead of the pandemic sell-off, and yeah, I've kind of gone nowhere. But you got there's just a lot of areas of concern here. Look at Amazon, right? Amazon basically is trading. There's the pre-pandemic levels there, and so Amazon. And so when you look when I look at this chart, what I see is, a year and a half, 2 years, actually 2 years of investments in Amazon underwater. In the old days, I'd draw a big, red sort of block around everything higher than this price so you could really visualize it. But I mean, there's a lot of damage going on. A handful of stocks, and they're starting to take out like the hedge fund hotels and that type of thing. And so when you look at these charts, going back a couple of years, what you basically see is a lot of the big cap, big name stocks are starting to get hit. Now, there's a couple of stocks sort of holding everything up. One of them's Apple, right? And even though Apple's had a pretty good sell down, I mean, it's still holding up relatively well. And Microsoft, those are the two that are really sort of holding things up, in my opinion. Although the Qs have sold down a lot harder than the S&P 500, right? Russell 2000, that was sort of the canary in the coal mine, I suppose. It tried to break out and then sort of failed, and then had that box drawn across all this price action. It broke down, practically retested the lows just recently here, practically retested the pre-pandemic highs. So anyway, the where the market was ahead of the pandemic, I guess my point here is that's a really good reference point for individual stocks, sectors, the market, whatever, indices, just because as far as like a sell down, and that was the all-time highs too, basically. I don't know about the Russell, but on the other indexes, like right before the pandemic, the market was at the all-time highs. So tons and tons of damage has been done. I don't know. Speaking of IPO, I sorted my list by gainers. Speaking of IPOs, there's a ton of these. This is Roblox. This is one of the favorites, but ton of IPOs that went public in the last couple of years and had tremendous enthusiasm and run-ups and are trading well below the IPO price. Right? This Coinbase is they love to talk about this. I guess it's like a proxy for Bitcoin or crypto or whatever, but just epic disaster no matter how you slice it. And there's so many of these that I suppose you could characterize this as a bear market. Now, obviously, theoretically, a bear market is when the Dow or the S&P, and not so much the Nasdaq, but they like to say the Nasdaq's in a bear market. Dow's held up relatively well. S&P and Dow have held up relatively well. The Nasdaq and the Russell have gotten smashed, and your typical individual stock has gotten smashed. But so hey, these little rallies like this, these pivot low rallies. Here's a stock that this is such a great example of. I remember looking at this chart a few times, and I remember seeing. I think we might have looked at this last week, but anyway, this is just a good chart to get your head around, because each time that this thing bottomed out and had a significant sort of rally, everyone thought the low was in, right? And there's so many spots on this chart where it sold down and then started to rally, sold down, big rally, big rally. And so this is just a really good chart. The further back you take it, the more you realize that each one of these rallies along the way down, was not the low, right? So I look at this chart right now and I'm like, oh man, that might be the low. And of course, I mean, look where it was. It was like $3 or something. But I mean, you've got to get that. There we go. This is just a really good example of why trying to pick the low in a downtrend is extremely difficult. And so there's a few things going on here, but what you notice is that you still got lower highs on these rallies, and you still had lower lows, but there was just a lot of places on this chart where you would think that the bottom is in. And so what that brings me back to is like this current market here. You see a perfect spike pivot low like that, and a lot of people want to think, okay, well, the bottom's in. And quite frankly, literally every up day since this whole sell-off started for the whole year, if you watch CNBC, which I don't necessarily recommend, but I keep it on for background noise in the office, and most of the time it's muted. But literally every up day they bring on all these guests and they ask them, yeah, is the worst of the sell-off over? And so it's going to be interesting to see how long this holds. I'd have to think I'd have to think if it wasn't for the Fed opening their big mouths on a daily basis and being so hawkish, and if it wasn't for these earnings misses where stocks just get destroyed, that that the market would sort of be ready to, and it still could, it still could stage an oversold rally, but watch that low there. So anyway, enough about the markets. Everyone knows, obviously, if you're holding some investments, you know what this market's doing and how nasty things are. And so we have not had this has not been a good swing trading environment. I mean, literally since the beginning of the year. Obviously, there's some individual stocks, energy stocks, material stocks have done pretty well, but the overall environment has not been conducive to swing trading whatsoever, right? And I'm talking about swing trading stocks that you can get in and catch an uptrend for, a couple of weeks, a couple of, a week, a couple of weeks, a couple of months. It's just basically there's been one significant rally here, which was, 2, 4, 6, 8, with 2 week, there was one 2 week rally. The rest of this year-to-date chart has just been sort of an epic disaster and not a conducive swing trading rally. Any swing trades, and we've had a few that filled. We've had a lot of potentials. We've had some that just got ditched because they never filled and they broke down. But as of right now, we have 3 potentials, and man, these things they make me nervous, but they are potentials. So JO, right? And this has been a potential swing trade now for quite some time, but it's still kind of basing out here. And so if it's headed back to the highs, then if it's forming a cup and is going to rally back up, then we got something. Then we've got we'll get filled on the way up. If it continues to meander around, then it's just going to stay pending unless it breaks down. So that's still a pretty reasonable chart. It's not bad. We have another one, material stock. Now this actually looks pretty good. Yeah, this thing's up today. Now there's actually starting now that earnings season's over. That was one of the other things too. Is there wasn't a whole lot while the market was selling off, right? We were right in the thick of earnings season, and so there wasn't a whole lot to be able to let through the filters because we didn't want to jump into anything that was ahead of earnings. So now we're basically through earnings season, so this is a pretty decent setup. This is longer term uptrend, nice relatively orderly sell down. You got that pivot low, and so if this is going to form a big, I was trying to find another spot on the chart. Yeah, it's not. There's not any good analogs on this chart really for where it is now. Maybe that sell down there, but anyway, I think you get the point. Because over the years, typically what we're trying to visualize is like a big cupping pattern. You get these pivot lows. It's kind of a cupping pattern there. It's a little gappy, but anyway, I think you can see the potential here. So if by chance this is setting up to rally back up, halfway, 3/4 of the way to this, then we're going to catch it on the way up. It's still got some work to do, right? So, but hey, not a bad looking chart. And just recently, U.S. Steel, same sort of thing. I mean, it's pretty much a longer term uptrend. There's a lot of sideways price action here, but this rally and now a decent little sell off. There's some potential here too. And so I've been saying that, let's see, XME, this is the material stock, which I guess U.S. Steel would fall into. But yeah, the XME, um, big rally while the market's falling apart. Think about that too, right? There's been just a couple of sectors, energy sector and energy and materials, and obviously that kind of goes hand in hand with inflation. And so um, they've had some pretty nice sell downs. Now there hasn't been, I got a handful of energy stocks in my list. There hasn't really been too many swing trading setups in the energy sector, because what happens is you get like a 2 or 3 day, well, this one's a little longer than that, but you get these really sharp sell downs and then immediate reversals. And so we haven't had a sort of, and they're kind of extended too, so we haven't had a whole lot of really deep sort of sell offs in a lot of these energy stocks. But there's one, NBR. So I got a handful of them on my list here just to kind of to watch. But I suppose the thing to watch is XOP, right? Which has got a couple sharp sell downs. But anyway, that's where the strength is, and everybody knows that. It's no huge mystery that energy's been the has been the one of the leaders. Energy and materials, yeah. So the problem with something like this, you're at the highs, and then boom, few days you get hammered down, and then rally. And so that's not, I mean, this is just this not a great swing trade setup yet. So I suppose Occidental Petroleum, people have been talking about this. I think Warren Buffett's in this, and hitting highs. Same thing here. Just not really a much of an opportunity for a swing trade setup. So on the outside chance that some of these energy stocks sell down, now some of the material stocks have sold down quite a bit. So when I saw U.S. Steel pop in the list, I started looking at some of the other ones and materials type stock. And so, I'm not really sure. This is a pretty brutal sell down, but there's a few of the other ones that could potentially be setting up for swing trades. So yeah, that was it. That was the three of them. JO, MP, and X are the three pending trades we have now. And so we'll keep your eye on the. You can look on the inside and see what the trigger points are. And the trigger points typically start off quite a bit higher than the current price action, and that's kind of for a reason. Now, when I look at these charts, when I look through a lot of charts, there's quite a few stocks that look like they could be traded off of the pivot low from last week, right? So keep that in mind. But overall, it's just, the entire market itself is sort of a minefield. It's got to be really, really careful. And of course, there's a bunch of Fed speakers today. So as we speak, S&P's down almost 2%. Yeah, this little rally off this pivot low. If we lose, if it sells down past I would say Friday's low, then look out. There's every potential it could fail here, but there's a pivot low and an extreme move higher that failed. And I think back then, like I said, the past 6 weeks and 4 weeks in a row out of a 6 week sell-off, I think the consensus has been for a rally. And boy, it sure looked like it going into this week. But then you get these extenuating circumstances, so we'll have to see what happens. But anyway, if the market does rally, if these sectors rally, then we'll have some open trades. If not, then we'll basically do what we've been doing all year, is just kind of kicking back and avoiding the damage. And so the best thing that we got going for us as far as as far as what we've been doing is that we've managed to sidestep the majority of the damage, right? Taking a few little hits here and there, a few little stop outs, but you basically just got to keep the activity low until the conditions are right. And the market, I don't know when that'll be. May not be anytime soon, but you never know. Bear market rallies can be extremely sharp, and we'll just have to see what happens here. So anyway, I'm going to wrap this up. Keep your eye on this list, and there may be some more that pop in here now that we're through earnings season, and then we'll just see what happens from here. Thanks for tuning in. I will see you here